Yo, what's going on, YouTube family? Andre Fix Official back at it again with another video. Just real quick before we get started, go ahead and smash that like button, hit that post notification so that way you guys get notified every single time I drop a new video. And if you guys want to be joining my live trading sessions, click the link in the description and that'll take you straight away to my live trading sessions with all my students. Okay, let's go ahead and get started. So last time we had gone over JPY, right? So we got over JPY. Our first entry was right in this area. Second entry right here, which as you guys could see, that second entry, boom, we went right into profits, nearly no drawdown, actually just like 2-3 pips drawdown. That was about it, and right into profits. And we hit our first take profit, which was to clear out the relevant highs that we had right here in this old high, which is where we have all that liquidity area. So all the liquidity that we had right here, we smashed it, we went right through it, and clear out profits right there, which was the first take profit, which I believe of around 90 pips or so. Yeah, like around 90 pips first take profit, combined with our other entry that we have down here, which is another extra 100 and something pips. Yeah, 150 plus 90, around maybe like 200 and something pips around that we've caught so far on JPY. Now on JPY, I'm actually currently looking to get in for new buying positions as we speak right now. Right here on JPY, as we could see, we currently see market rejection. Well, not market rejection, but we see that markets coming and testing into our new information price candle that we left right here, which is this last bearish candle before the push up. So I would want to see market come into that, which I already did. Hopefully right now we start seeing some rejection. If not, market's going to keep on coming in deeper into that area, into what is around 50% of that information price candle. Now, why 50%? Because that's where the mitigation block tends to go to and retrace into those areas. Also, we mark our fib from the start to that end of the impulse. I believe that this right here, that 50% should be either the 705 or 709 from our fib level. So it's mark fib to start to end, and boom, there we have it, which is around the 705 level. I'm gonna just go ahead and adjust us right there. So yeah, I would want to see market come into that 705, which is our optimal trade entry. Also, we go to a lower time frame, like the 15-minute. Maybe in that area, we see a smaller connection price candle, and we'll see that 15-minute time frame. So coming into the 15-minute time frame, let's go ahead and check that out. We'll be testing inside this area, which is this imbalance area coming to a downside, which is 50% of that imbalance. Now, if we don't see or respect that 50% of the imbalance, the next stop would be right into the opening of our 15-minute time frame at connection price candle, which would be this candle right here. But I would really want to see or respect this imbalance candle right here, which you could also call the institutional candle, which is this big bearish candle that we have. That's what we call institutional candles. Well, I want to see market come into that area and start getting rejected. Either way, as we can see right now, market is starting to get rejected at this exact moment. So I would most than likely start getting in for a buy position for what is JPY, right? So JPY, I'm gonna get in for a buy position, and my stop loss is always, no matter what, gonna be 10 to 20 pips below our conventional price candle. So from our 1 hour conventional price candle, so let's say I'm gonna get in for a buy right now, I'm getting in for a long. My entry would be based right here, since that's what current market is. And my stop loss, I'm gonna put it where? 10 to 15 pips below conventional price candle, so right here. So let's get 10 to 15 pips or 20 pips. So I'm gonna have it right there. I'm gonna have a stop loss of around 24 pip stop to be gaining a total amount, which my target is gonna keep on being the same target from our initial entry, which is our daily highs, which is where we have that daily liquidity, which would be up here. So this is our third entry, which our take profit would be 160 pips in this case, risking 24 to gain 160 pips. So that's currently what I'm looking at for JPY at this moment. Nothing else to be happening for right now. Getting very, very well respected on that area, so we can see right now lower time frame as well. We go to the 5-minute time frame, well, we're starting to see some rejection going on, as well as coming into the 1-minute time frame. We started seeing that rejection from this candle, and I would really, really love to see JPY keep on rising to the upside. So now the next pair that I was actually taking a look at, I was taking a look at this pair from last night New York session. I had actually placed a buy limit order on what is USD CAD. USD CAD, I'm just going to break this one down on why I'm looking for buying positions. So on USD CAD, we can see how market on a daily time frame, we already created that retracement, right? So market came up here to do what? Clear out old high. So we clear out the old high that we had right on this area. And once we clear out old highs, what's going to happen? Market's always going to tend to do what? Retrace back down. It's going to retrace back down and test into a commission price candle, which could also be a 705 or 79 fib level. So I'm going to just go ahead and mark my fib level from the start to my end of the impulse. So start to end, boom, right here, which is our 79. That 79 fib level would be aligning with our daily accumulation price candle that we have right there. So that's how I base my entry at. Actually, if we go to a lower time frame, this is where I start basing my stop loss, which my stop loss just around 15 pips. So let's see. Go ahead and erase that fib, which is actually about to activate. So if you guys want to get it on this, you guys can. So let's see. 10 to 15 pips. So around right there, let me just move my stop a bit wider to 17 pips, 19 pips, around there, risking 19 pips to overall gain a total amount of, I'll check for you guys right now. And what is 232 pips, which is where we have our daily liquidity. So right here, we have our buy side liquidity, whereas we're already to traders aren't tuning for selling positions. So right in this area, we have a lot of stop losses to be cleared out. So we go to the daily time frame, you guys can see how we had all that liquidity right there. So all the liquidity is what banks look for to stop out, right? Why? Because right here, markets are coming down because the retail traders started seeing that market was overbought. So what are they gonna do? They're gonna start getting in for where they're selling positions. So us as institutional traders, we're gonna be waiting for that retracement. Yeah, maybe we did wait a couple of days, but either way, market's gonna have a much greater spike to the upside and drastically. So a spike that will be seen as institutional, it's gonna be just like this candles right here, which is an inbound. So it's gonna form another push to the upside, creating no support, no resistance, just a pure pressure of buyers once we activate that buy limit. So entry price, that way you guys have it. So here we have it right here. This would be my entry position price. This would be my stop loss area. I mean, my take profit, my bet. And that right there would be my stop loss, risking 19 to get a total of 232. Obviously, you guys could either twin trade it and secure profits throughout the road because it might take a day or maybe a week to go to that area. But we're going to be securing 232 pips in total. As of right now, those are the only pairs I'm actually taking a look at, which is Euro JPY and USD CAD for a buy limit that I believe USD CAD should activate at any moment. Also, you guys want to be looking at Dixie because Dixie is going to tell you a lot about USD main pairs, about what's going to be happening in the market. So me personally with my students, I did mention the market on Dixie wants to come down and get rejected from this order block right here, which is the commission price candle. What did market do? Market came down to that commission price candle and started getting rejected, which is if Dixie goes down, that means that USD CAD, USD CHF, and USD JPY should be going down. But now since we are going to be seeing Dixie to the upside, what's going to happen? USD CAD to the upside, USD JPY to the upside, and USD CHF to the upside as well. So mainly on USD CAD, we might just see a bit, we just need like 5 more pips to go down, to be honest, to activate that sale limit that we have, which is just, yeah, like 5 to 7 pips. We activate that sell limit, and boom, we go to the upside now. So with that being said, that'll be all for me today. Hope you guys learned something new. Like I said, I hope you guys do take advantage of this trade that we're taking right now, which is USD CAD and your JPY. Your JPY means currently right now showing some pretty good rejection. As mentioned, we're already in profits. Boom, there we go. Instant profits from that buy, that rejection, perfectly right to the moon that we're gonna start going. I'll see you guys in the next video. Like I said, click the link in the description so that way you guys could be joining my live sessions with my students and hop on live with me and ask any questions that you guys have in the live sessions. And tune in and to the next video. See you guys to the next video, and happy trading.